Yo, what's on, guys? Welcome back to the channel. In today's video, we're going to go over the trades that we took today as well as the game plan going into tomorrow. So this is what we looked like off of open. So yesterday we ended up crossing on the 30-minute on the call side. So technically that would flip the market bullish. Or I mean, today we ended up crossing off of open because I did pick new contracts for next week to use because the current ones were just so expensive. The chart was just moving really weird. The candles were delayed, so I went with the next week's contract. So we had the 535s and the 525s. So 535 calls, 525 puts, and this gave more of a clearer direction and just way easier to read for the charts. So we ended up opening on a very, very key spot on the put side. If we go look at the puts, again, this happened earlier in the week. We ended up hitting, again, the 4-hour 50 down here, and then also with the daily 50. So two really strong areas of support on the put. So, the gap up that we had, not the gap up, but the move we had yesterday, the 12% move, really, didn't have much more room to go to the upside. Once we opened and we had these contracts, I mean, it looked pretty bearish. And after a 12% day, I really wouldn't expect the market to continue up. So obviously today the market ended up dropping like 6-7% again. So this was the reason, because we had this massive support on the 4-hour and the daily time frame. And how you could have played this was based on the 0-day charts. Again, when we go back to the call side though, we were crossed on this 30-minute, but since we're at those higher time frame areas of support on puts, that's why this move ended up just getting reversed back to this 50 SMA, which ended up, marking the bottom for the day. We didn't hit it exactly, but came pretty close. I mean, within like 5% of the premium between of where the 50 is and where price is. So, this was a good spot to take profit if you were still shorting. So when we go to the 0-day chart, 5-minute time frame, this is what we looked like off of open. So this chart was going negative on the call side. It was really hard. I wouldn't have taken this just because, the 50 didn't turn until, later in the day, later in the morning at like 11 o'clock. And, the risk to reward here just wasn't worth it. I would never take a negative cross when the premium's all the way down here at 295 and the 50's at 7.2. Like, I just wouldn't take that. What you would want to wait for is a put cross. So we ended up getting that right here. 10 was going above the 50, and we got the cross. The 50 started to curl on this 11:15, 11:20 candle. I forget exactly where, but one of those candles ended up curling, and then we just got a continuation move lower, and we dumped. I mean, I don't even know how many points, probably like 500 points, or like 400 or 500 points from that cross. And I mean, you could have taken this because when you looked at the 30-minute chart on the call side, it was crossed. But in my opinion, since that higher time frame, 4-hour 50 and daily 50 were there, you could expect us to see a good move. And we did have a lot of room to this 50 SMA. It doesn't seem like a lot, but I mean, we were all the way up here, I think, when it crossed at like $8 on the premium, and then the 50 is all the way down at like $6. So I mean, you still had like $2 on the premium to move, and since puts were crossing, I mean, I think it was worth a shot to take that, and you could have squeezed some points. But I mean, with the volatility, you just gotta size super light if you're trading futures, because the moves are just like a 0-day cross. Like I said, that cross went like 400 or 500 points, and like your typical like 5-minute candles is like 50 to like 70 points. So you just gotta lower your size in this type of market because the volatility is so high. And I mean, that's pretty much how you would have played today. And then once we got near this 50, you could have sold, or I mean, by then you would have been all out of that because the trade went like 400 or 500 points. But that was really the only trade that I saw today that you could have taken. 0-day cross on puts, pretty simple, and then just sell once we got to this 50, or whenever you're happy with the profits that were made. But going into tomorrow, I know futures are down right now like 1% or 2%. Again, when we look on the call side, it looks bullish, but then we have the put side that's sitting at those massive areas of support still. Like if you look here again, the 4-hour is right around this 50 SMA. This chart is still pretty bearish looking, and the daily, again, same thing. We're holding the 10, holding the 50. The 50's up on both, on the 4-hour and the daily. So it'll just be easier to read off of open tomorrow. If the 30-minute chart on the puts goes, or not the 30-minute chart on the puts, the 30-minute on the calls goes negative, then we're probably going to see a pretty big downside move. And then if that 30-minute 50 does hold, then we're probably going to see a good upside move. So that's pretty much how you could play tomorrow. And then if we remain bullish, 30-minute or the 5-minute cross is going to be your trade to take, and then 50 dip on the call side after that cross. And if we dump tomorrow, obviously a put cross will be the play. Since the 30-minute chart's going negative, you can take a 0-day cross on puts, and then the 50 dip also works on the puts because of that initial 30-minute cross going negative. It's the same way as we would in a bullish market. as you would play, the negative cross. When you get that initial negative cross, it's like a normal 30-minute cross, but since we're losing trend on the bull side, that the 0-day cross is likely to continue and hold that 50 since the bulls are losing the trend. So that's pretty much how I play tomorrow. That's the game plan. That's what we did today. If you guys enjoyed, drop a sub. If you guys want to learn, join the Discord down below. But that's all I got. I'm out. Peace.